Hi, I'm Amy Feller, also known as the Roofer Chick. Thank you for joining us for another Tailgate Talk. Today we are going to talk about why you should not be buying an ACV policy. We'll talk about what it is and why you don't want it. So there's two basic types of insurance policies. There's some others, but we're just going to cover these two. There's an ACV and an RCV. And they sound a lot alike, but they're not. So ACV stands for actual cash value. And an RCV stands for replacement cost value. Let's see if it fits on here. There we go. And you want an RCV and you don't want an ACV. So what it is, you have an insurance claim, you have damage, the adjuster comes out, the insurance company decides that they're going to cover replacing your roof, and then they cover a portion of it and you cover a portion of it. So with the actual cash value, I have to think through this really hard because I get confused myself. But say you have a 30-year shingle on your roof and you're 10 years in. So you've used 10 years and you have 20 years left on the roof. They will come and the actual cash value, they're gonna pay you for the years that you haven't used. So the value of what is left. So, well, we'll go through a math problem. That'll make it a lot easier. So the way an ACV policy is going to work, let's say that your roof is worth $10,000, which is an average price for a roof. And you have a 30-year shingle on it and you've already used 10 years of life. So that means that you have 20 years left. They're going to pay you for the 20 years left that you haven't been able to use, basically, and not for the 10 years that you already did use because you already used it. So here's your $10,000 roof, and this is the third that you've already used, and so that leaves $6,667. That's the actual cash value of your roof. But you also have to pay your deductible, which, let's say pretty standard deductible is 1%, and that's 1% of your home value or your property value, not your roof value. So if your house is worth $250,000, 1% is going to be a $2,500 deductible. So that's the part that you're responsible to pay, and so that leaves you $4,162, and that's the check that you get from the insurance. So you get $4,162 to replace a $10,000 roof, basically. If you have an RCV policy, all of this math still happens, and this is your first check, but they're paying replacement costs. So then when you get the work done and you prove you have it done, they're going to pay you for the part of the roof that you had already used. And they call that your depreciation. And you get it back. That's the big difference. You get your depreciation back. So you always want to have an RCV policy. You do not want an actual cash value policy. They are bad news.